I think what's really missed by so much of the Western media and is that right now today the Chinese yuan and the Russian ruble are one-to-one backed by physical gold. I can take, if I'm a BRICS member or if I trade with them, I can hold that currency or I can just cash it out one-to-one for physical. So what we're talking about is, and they are producers. They manufacture it. So really, if Trump is trying to emulate that, not only the production side of things, but also to back the U.S. Treasury with gold, it makes sense to me.
And Lavrov, who's Russian, and the guy who developed BRICS Pay is Russian. They're all connected. They're just not poking President Trump, and that's probably a smart thing. That makes sense?
A rebellion against the U.S. dollar is no longer a distant idea. It's happening right now. Countries inside and outside BRICS see an opening to break free from America's financial dominance, and they're seizing it. Instead of depending on Washington, they're rolling out digital currencies, reshaping settlement networks, and anchoring trade to gold. This isn't a passing trend. It's a strategic effort to take back economic control, avoid sanctions, and establish a financial system beyond U.S. reach. Andy Schectman and Andrew Maguire point to one of the most important developments, China's MBridge platform. Unlike the aging SWIFT system, MBridge settles cross-border trades in seconds with costs up to 98% lower. To mitigate confiscation risks, participants are establishing multi-jurisdictional gold vaults. 16 nations, representing nearly 38% of global GDP, are already connected. This isn't theory. It's infrastructure being laid for a post-dollar world where tangible assets back trade. Officials like to frame this shift as monetary sovereignty. In practice, it's about escaping Washington's sanctions machine. Russia, Iran, and Venezuela have already dabbled with digital currencies to bypass restrictions. However, the most credible alternative is Project MBridge itself, a prototype for central bank digital currencies that settle trade directly with no dollar involvement whatsoever. China, Hong Kong, Thailand, the United Arab Emirates, and Saudi Arabia are leading the charge, especially after the Bank for International Settlements stepped back. Their participation signals that the global financial system is undergoing a quiet transformation. The era of unquestioned dollar supremacy is being challenged head-on, not just with words but with working systems. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The thing is, when I hear redeemable, that means it has to be physically redeemable. And so it can't just be an accounting gimmick. It has to be. So therefore, if somebody claims or redeems gold, it means that someone has to buy that gold. It has to be a balance. So, and I think that, for example, right now, and I see that coming because I think what's missed, and I know you are all over this, and we talk about the unit, we talk about all these other things coming on, and there's so much to talk about. But I think what's really missed by so much of the Western media and is that right now today, the Chinese yuan and the Russian ruble are one-to-one backed by physical gold. I can take, if I'm a BRICS member or if I trade with them, I can hold that currency or I can just cash it out one-to-one for physical. So what we're talking about is, and they are producers. They manufacture it. So really, if Trump is trying to emulate that, not only the production side of things, but also to back the U.S. Treasury with gold, it makes sense to me. Then you're talking about suddenly this whole unipolar, multipolarity kind of war that's going on. Maybe it becomes a multipolar solution. But this is an interesting thing.
Yeah, so the difference is, to your point, the yuan is now immediately convertible into gold on the Shanghai Metals Exchange in yuan. And they're building their vaults that we've talked about, the multi-jurisdictional vaults. First one in Hong Kong, the next one under construction right now in Saudi Arabia, and then throughout the whole Belt Road. To me, that is the skeletal system of what they're trying to do. And to your point, yes, you don't have to convert to dollars first. So it's trading across the bridge technology, MBridge, which is now the bridge or the renminbi cross-border payment system, which will then settle imbalances in gold without converting to dollars first. To your point, it's backing the currency. This will not back the currency. They're going to destroy the currency. This will back the treasury. And then eventually we grow our way out and maybe get, our currency act in order once we start to pay down our debt. So one is backing the system. One is backing a currency. I think they both are unique and interesting to go down the rabbit hole and think about it. But one of the things that I found very interesting to your point about what the BRICS are doing, Andrew, and I haven't heard a lot of people say this, is that so they came out, China did. Now, first, the key to all this is building all these multi-jurisdictional vaults. Ask Venezuela about that. When their gold was held in the Bank of England, no, we're not going to give it to you. So now you have vaults all over the place where each country will sprinkle gold amongst these vaults in theory to spread out the jurisdictional risk. But one of the things that's interesting to me is China came out about a month ago, Andrew, and said, we have connected our bridge platform, which is in essence MBridge, to the 11 Asian countries, ASEAN, the countries in Southeast Asia. They're operational, and 5 Middle Eastern countries. Now, this represents 38% of global GDP. Now, I want to read something to you, an article that came out of Forbes just the other day. And I made a big deal about this on every single podcast I was on, saying they've connected the bridge network to 38% of global GDP. It's operational. It's working, these Asian countries. And what's really, really interesting is the article that just came out of Forbes. And let me just read this to you. It says, Forbes pointed out that China is now just the third largest trade partner for the United States and a distant third behind Mexico and Canada. In the month of May, China was less than 6% of U.S. trade, which was the lowest level in over 20 years. Then you have the Asian countries, ASEAN. Again, these are the countries Southeast Asia. And together, they have a population over twice as large as the United States, nearing 800 million people. These are also some of the fastest growing consumer markets in the world with a fast growing middle class. And this group of countries, wait for it, is now China's largest trading partner by far, way ahead of the European Union and the United States. We did 6% of trading with China. They're doing almost 20%. And they're their largest trading partner. These countries in Southeast Asia are now connected to the MBridge and settle imbalances in gold. And I said that they're going to issue it to the Belt Road Initiative. They're going to. You watch. But I just heard something. The BRICS Pay, the gentleman was being interviewed, the guy that designed it and their CEO. And he said they are right now, this is B2B, this is retail. It's like a credit card where you can spend in any of the BRICS countries seamlessly, B2B or small bank to small bank, consumer to business, whatever, retail. He said, we are now, right now in China, negotiating to roll this out on the Belt Road. And he said, and in a few years, BRICS Bridge and BRICS Pay will be connected. They're going to roll it out to the Belt Road, which is 155 countries, 75% of human population. They're going to roll it out to the Shanghai Cooperation Organization. They're going to roll it out to the Eurasian Economic Union. Why do I say that? Because Sergei Lavrov just came out and said, this technology settles in 7 seconds. It is free from SWIFT interference. SWIFT takes 3 to 5 days. It has a 98% reduction in fees, and we're opening it up to the rest of the world. And by the way, it's not compatible with the dollar, the pound, or the euro. They're opening up to all of these countries. So everyone focuses on the BRICS. Not big enough, Andy. Not substantial enough, Andrew. Well, sorry for the language. I'm just simply saying, you now, if Lavrov says you open it up to 90% of human population and allow them to trade outside SWIFT on a retail level and on a central bank to central bank level with imbalances settled in gold at that level through a multi-jurisdictional set of vaults. You see, when the BIS pulled the plug at the 12th hour on MBridge, embarrassing them the way they did, say, we can't be part of a technology that allows any country to sidestep Western sanctions, pretending that they just realized that Russia was the R in BRICS. That's what incentivized all this. So now China is taking the lead, calling it the renminbi cross-border payment system. They're setting up all of these vaults that will connect with the BRICS vault, that will connect with the vault in Dubai, that will connect with the vault in the new vault being built in St. Petersburg and Moscow. And all of these vaults will be the backbone. and it will be the renminbi cross-border payment system until maybe Trump is gone, and then bang, you bring the unit in, which they've already agreed on in principle, but the rails are done, the infrastructure is done, the technology works, and the vaulting system, which is the key to it all, because you can take possession, to your point, of gold in multi-jurisdictional vaults. The next one is under construction in Saudi Arabia, who was the fifth partner in MBridge at the end. So they're straddling both sides of BRICS, but you can see where their allegiance is actually focused on. And instead of antagonizing Trump with this BRICS bridge, they call it the renminbi cross-border payment bridge for now, but it's the same technology as MBridge. And Lavrov, who's Russian, and the guy who developed BRICS Pay is Russian, they're all connected. They're just not poking President Trump, and that's probably a smart thing.
Gold is near all-time highs, but Andy Schectman points out that since November, the U.S. has quietly become a net importer of gold. Extraordinary amounts are flowing in, a phenomenon he believes can't be explained by simple market forces. According to Andy, this could be part of a bigger plan. The U.S. is preparing to remonetize gold, but first, it needs to bring it back under the radar. The United States relies heavily on gold imports to meet domestic demand, with Switzerland, the United Kingdom, and Canada serving as the primary sources. These import relationships reflect complex global refining and trading networks rather than simple bilateral exchanges. While retail investors are heavily invested in stocks with record margin debt, billionaires like Jeff Bezos and Warren Buffett are quietly selling equities and stockpiling commodities. Andy believes that the only way out of America's crushing debt is a revaluation of gold, and the world's most powerful players are already preparing for a gold-backed system. Everyone knows that Donald Trump has launched a large-scale trade war against the world. But who knows that central banks are buying gold in historic quantities? Many people are aware that the U.S. tariffs on Europe will now be 15%. But who is aware that China is continuing to buy gold and, what's more, is doing so discreetly? These issues are closely linked, yet they are not being treated in the same way. Let's get back to the interview.
So in 2005, if you wanted to buy a house, the average price would cost you 522 ounces of gold. It was $230,000 or whatever. Now the average price is 410. So the dollar is deflated against real estate, and that's kind of to your point, and that's a trend we've seen for a long time. But the 522 ounces of gold, instead of selling it, you took out a mortgage and trying to pay it off. The 522 ounces of gold today are worth $1,750,000. It buys you over 4 houses today. You go back to 1960 with gold at $35 an ounce and the average price of a house $17,000. So 17,000 divided by 35 is 485 ounces of gold that you've put under your mattress for 65 years, earning nothing but dust. The average price of a house today, $410. So if you would have, instead of paying off the $17,000, you sold your gold, that would have been a bad mistake. Instead, you take out a mortgage, you do it, you leave the gold under your mattress for 65 years for your grandkids. And guess what? That gold, earning nothing but dust over the last 35 years, today is worth $1,625,000. That's $17,000 that you paid for your house. That was the average price in 1960. Won't even buy you furniture for your house. This is the trend that you speak of, whether it be land or gold. And we can go back to Roman times or the $20 gold. I mean, you go back as far as you want. What you will see is gold doesn't need to pay interest because it keeps up with the loss of purchasing power of the currencies underneath it. And it's going to accelerate. And to your point, that's spot on. In other words, you don't buy gold to become wealthy. You buy gold because it is wealth. And it is wealth that was mentioned over 400 times in the Bible. And here we are 5,000 years later, and things have come full circle where the most well-funded and well-informed traders in the world, all across the globe, are buying it like it's going out of style and taking possession of it. Doesn't that need to mean something? Would you argue that maybe they're under the cover of dark right now buying it back? That's part of the volatility. Buying it back when they smack it down, maybe smack it down to buy it back. Maybe all the gold coming in is part of the plan. I don't know. And I think that's right. And it's weird that they haven't audited, but yet made a big deal about it. I think maybe Jeffrey Epstein is hiding inside of Fort Knox. I'm not sure. Maybe that's why they don't want to go in there. But whatever it is, they should, they brought it up and then they didn't do anything about it. And when Treasury Secretary Bessent said we want to remonetize in February, the assets of the balance sheet of the U.S. government. I think someone said, Scott, what the hell are you doing, brother? Shut up. It's too soon. We have to bring all the gold back. And he backed away from it. But look at the balance sheet. Largest asset is student debt of 45%. The next asset is military. You're not monetized national land. But I think really what they're talking about is remonetizing gold. And he jumped the gun on saying it. And then, no, I didn't mean gold. I think someone grabbed him by the neck and said, dude, it's only February. Wait until next year when we talk about it, or much later. We got to get the gold back first. Because remember, it's just tariffs. That's why all the gold's, it's just tariffs. And everyone, I think it drives me nuts when all the talking heads say, no, the gold's coming back because of tariffs and arbitrage. Bullshit it is. It's not coming back because of tariffs and arbitrage. The amount coming back is so extraordinary. Month over month over month over month over month over month that it is far past tariffs. And I just think that there is something big in store for the price of gold. I do. And I think it's the only way. And I think someone grabbed Trump and said, this has to happen, because it's no coincidence that since November, we've become a net importer of gold. And I guess we'll see, Andrew, but I'm very optimistic for those of us holding gold where it ultimately ends up. I think saving in dollars, you're destined to go broke. If you're not a contrarian, as Rick Rule says, you'll be a victim. And I think now more than ever, it's important to look at gold as wealth. Wealth that the most well-informed traders in the world, forget about how wealthy they are, the central banks, the sovereign wealth funds, they're all standing for delivery, and they're all taking delivery. And many are leaving the Bank of England, the New York Fed, and the COMEX ecosystem to have possession of it, to remove counterparty risk. This all speaks to this new perhaps legislation, or this new idea of using gold to back a system. Get it out of the COMEX, that ain't going to be the system. I guess we'll see. But interesting times, as the Chinese curse says, may you live in interesting times. These are very interesting. And all the crumbs I see point to something big happening. Maybe I'm onto something, or just stupid enough to say it publicly, but this is what I feel. I don't know how else. I mean, I suppose you could let Bitcoin go to $1 gazillion and buy your way out of your debt. But short of that, I don't know how you back your way out of this debt without having zero interest rates and a devalued dollar. Well, gold and revaluation of gold does just that. And to keep the government going, well, how about we pass a stablecoin bill to run the front end? I mean, I could see it working so that we can bring back our manufacturing and start all over as an engine of growth and manufacturing and ingenuity. I think in the end, those few people who take the time to think outside the box, to spend time searching out alternative sources of media like you and I, who have a good track record, and others, instead of relying upon a media who does nothing but create decisiveness and misdirection, will be the few people who come out ahead. But I am sure of one thing, that the only thing I can tell you is this: in all the years I've done this, since 1989, I've never seen anything like this with what's happening with gold and silver imports and big money buying it and taking possession. It's 4 feet of snow in Death Valley, which is usually about 120 degrees in July. It's an anomaly, but it continues every single month now for since November. At some point, it's not an anomaly, it's a trend. And the weirdest part about all of that, with all of this gold being brought in here, gold at near all-time highs, not a damn word out of the media, not a word. It's just Bitcoin and stocks and bonds and real estate is paving the road to retirement. So everyone out there is missing. And we know it's really interesting, Andrew. Right now in the United States, right now, we have the largest allocation by the retail public ever in stocks at about 54%, higher than the dot-com bubble. We have the largest amount of margin debt ever at over $1 trillion, people gambling and speculating on their stock portfolios. At the same time, virtually no one is buying metals. The premiums on physical metals are as low as I've ever seen in my career, ever, in 36 years. At the same time, you have Bezos, who has sold $6 billion of Amazon since June. You have the institutional traders who have averaged between $2 and $4 billion a week since June selling equities. You have record amount of Warren Buffett, $500 billion in cash, Zuckerberg, all of them are dumping stocks, and the insiders are leaving and draining the world's exchanges of physical commodities, as you can see. Who the hell's buying billions and billions and billions and billions of dollars worth? So to encapsulate, the retail public has virtually no exposure in commodities and is all in and on margin on the equity market, as the insiders are leaving the equity market in droves quietly. And Oh, by the way, the 3 largest shareholders of NVIDIA, board members, they're all selling stock. So they're all leaving, but buying copious amounts and taking delivery of commodities. What could possibly go wrong for the investing public? And it's the contrarian thought. And this is why so few people ever make it in investing, because they follow the herd instead of doing what you and I do. And that is study, research, and have the nerve and courage to act upon it. In the way that we act upon it is for our own portfolio, but even going as far as sitting in front of millions of people right now who watch this over the next several months and have the courage to say it. And so I'm not saying I'm right, and maybe I'm stupid for saying it, but what I am saying is everything I see is telling me that this is not just tariffs. This is not just arbitrage. This is way bigger in it. And I see it starting with the BRICS, largely because of you and you turning me on to so much of the stuff over there. And I see it happening here. And you put the two together and it makes such sense on a global standard. And yet we don't have anyone with enough journalistic integrity on any of the mainstream news outlets to even give us a sniff of what's happening. So I appreciate you giving me the liberty to say these things. And I try and catch almost everything you say and everything you put out. And it's just an honor to be here with someone like you, and looking forward to, to doing it again real soon. Happy to answer any questions if there are any. But I just think that I hope people at least give this a little thought, because this is not just arbitrage. This is not just tariffs.
According to CNBC analysis, the gold market's reaction to trade policy changes demonstrates the metal's continued importance in global financial systems. Nations are increasingly viewing gold as insurance against geopolitical instability and sanctions risk. Unlike currency reserves, which can be frozen or devalued through policy decisions, gold protects against counterparty risk without compromising sovereignty. Many investors view gold primarily as a hedge against rising prices, but its defensive qualities extend much further. The momentum has shifted in recent months, though. After a steady uphill climb, the price of gold hit the brakes, leaving many investors wondering what's to come. If nations and billionaires are preparing for a gold-backed future, why isn't the average investor paying attention? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.